We're joined now by Johanna Chua. She's the chief economist of Asia Pacific at Citi, and she joins us live from the Hong Kong studios. Johanna, this is very interesting indeed. Could you give us your take on what's happening in the bond markets here in relation to inflation and whether these central banks are doing enough to counteract that?
Sure. Yes, I mean, actually, at the moment, there's been actually a very strong demand for some of these bonds. And a lot of it is, rather than looking at real interest rates, clearly as a function for central bank, a lot of investors are looking at yield, absolute yield vis-a-vis funding costs, such as U.S. rates. And the fact that the interest rate differential between Asian bonds versus, say, U.S. bonds or funding costs in U.S. is actually positive and rising. So that has actually provided a positive technical support for the bonds, on top of the fact that people are expecting currency appreciation.
So it's all about the currency appreciation then, is it, Johanna? And that leads me to my next question then. Do you think to a certain degree, and I know you're an economist, not a bond trader, that potentially that the bond markets are a little bit overheated? Well, at the moment, I think it's probably a little bit too early. I mean, given the fact that we just had the FOMC statement yesterday, that clearly the Fed remains committed to keep long-end rates relatively low. So on the back of that, plus the global growth backdrop, still seems fairly favorable for bonds at the moment. So I think at the moment it's probably too early to tell. The latest CPI data, for example, that just came out of China, although we are seeing CPI increase a little bit, you saw PPI come down quite a bit. And I think some of the inflation pressures, which is still is not really a huge concern at the moment across Asia. I mean, there's been varying momentum, but maybe Indonesia momentum is picking up a little bit more. But for the rest of Asia, it's actually been fairly manageable. And importantly, core inflation across Asia, including Indonesia, has still been fairly manageable. So it's not particularly alarming at the moment yet.
I guess from the investment side of the equation here, Johanna, the key question here is why invest in bonds when the yields are so low right now?
Sure. Well, there's three main reasons, right? So first, as I mentioned earlier, it's partly really a view on the currency and the fact that Asian currencies still are largely undervalued. The second point is really in terms of interest rate differential with the U.S. And even though the yields are low, relative to U.S. yields, Asia still offers positive and rising yields. And the third point is really the view on, sovereign risk. I mean, we've had this, major game changer this year about concerns about fiscal sustainability on the back of what's happened in Europe. And to a certain extent, because of fiscal prudence in Asia government bonds have been kind of an alternative safe haven for a lot of investors. And those are the three main reasons why people continue to invest in bonds.
Johanna, in terms of course, all these varying markets, which ones remain, of course, the most fragile? Should potentially inflation become a bigger problem than expected, which ones remain the most fragile in terms of where we could see some exit from this market? And I'm talking about in terms of the ratio of domestic to foreign buyers.
Well, there's actually only the most crowded in terms of positioning, foreigner positioning, is Indonesia. About over 28%, almost 28% of government bonds are held by foreigners, followed by Malaysia at about 22%. And I think the key thing is, I guess, if there was a huge bout of risk aversion and inflation did become a huge concern, perhaps from a position unwinding, maybe Indonesia could be vulnerable. But at this juncture, I mean, given the global environment, the technical flows to EM debt funds, it's probably still a little bit too early to be extremely alarmed about it at the moment.
Okay. Interesting market. Johanna, great to have you with us. Thanks so much for joining us.